No worse than feared. I think those numbers tend to be very crunchy, not very reliable, as it were, with the massive revisions that we see. I think consensus realizes that our economy is operating on maybe one leg, and that is the service sector, consumer sector, definitely not manufacturing. And I think a lot of us are underestimating how powerful that can be and how much of a tailwind that could be, precisely why I think the market continues to hold up as good as it has today.
And I suppose a lot of it comes down to the Fed's expectations as well, because obviously we know they are so data dependent. But given this reading obviously coming in line with expectations, I mean, does that provide confidence for the market that we will in fact see the Fed, I guess, on their course next year?
Yeah, absolutely. I think as fearful as the Fed rate hikes seem to be to a lot of people, on the whole, it is a tailwind to our market because it's showing that we maybe have gotten close to reaching escape velocity. Not that it's without risks, because it clearly is not. I mean, there's a lot of risks associated to it, but I think it provides participants with the confidence that they're looking for, that the Fed has the nerve to raise rates even in this unknown environment we're in right now.
Well, speaking of those rate rises, I mean, next year likely to be a bit of a turning point in history, obviously, with the Fed beginning to raise rates. This obviously coming at a time of that policy divergence among other central banks. Putting those two together, do you think that's likely to bring about more volatility next year?
You know, I do think it's going to bring about more volatility, but I don't think it's going to be as predictable as consensus seems it's going to be. If you've noticed, people are very negative on gold, very bullish on the U.S. dollar, et cetera. It seems like it's prerogative that these things will continue to act that way. I'm not so sure. I mean, I think there's going to be a lot more volatility with the divergence in central bank policy. However, I do think there's going to be some global green shoots that we're not expecting, and perhaps that divergence won't be as great as first expected.
In light of that, I guess, if we were to continue seeing higher volatility, I mean, what stocks and sectors do you think would benefit the most out of that volatility?
Well, I think in the U.S., like, the only sector I really care about is the financial sector, especially with homegrown banks here, banks that are going to benefit from the continued lift of housing and construction, and also net interest margins. So banks that don't have that big exposure to worldwide events. In Europe, I still think real estate and banking makes sense. It's cyclical, makes sense. Japan also, the insurance sector makes a lot of sense. And as I've said before, I still believe I'd still prefer to put my money in European and Japanese equities than U.S. equities right now.
What about more broadly, I guess, on those US equities next year? Because obviously this year it looks like the S&P 500 still just in negative territory, obviously a couple of weeks still to go. So we may end up, you know, pretty flat to end the year. What's your view on those US equities as we head into 2016, obviously with the Fed raising rates? Do you think we can expect to see the market tracking higher?
Yeah, I do. I think we need the cash needs to get to 2058 to be flat on the year. I'm expecting mid-single-digit returns from the S&P 500 for the end of this year. I think I'm a little bit more aggressive than most people, and that's also stating the fact that I prefer to invest somewhere else other than the U.S. right now, but it's really more valuation-oriented. I think profit margins will continue to be robust. I think the strength in the dollar is well overdone. I don't think we're going to continue to see dollar continue to ratchet higher. And I think we've seen the worst in energy. So I do think it's going to be a mid-single-digit year for the U.S.
What about your outlook for global growth, Larry? Because this year we've obviously seen pretty deep recessions in Russia, Brazil, along with those plunging oil prices. Do you expect the backdrop to be somewhat more favourable next year?
I absolutely do. I mean, I think there will be some green shoots, and you're absolutely right. Some massive recessions in both Brazil and Russia. Not to say it can't happen somewhere else. It definitely could, but it's pretty wild, and I think that situation has stabilized. And when you think of the beneficiaries of a lower oil price, it's going to see some tailwinds throughout the globe. Not to say that I would start investing in emerging markets, but I do believe we will see some green shoots, and I don't think consensus is really looking for that.